When the share market was trading in red on Monday, LIC was making a new record in destroying investors' wealth. The rupee is at a historic low against the US dollar. At that time, two things were going on just as usual. FIIs were selling in the market and domestic mutual funds were on a buying spree. On Monday, FIIs sold net shares worth 4,164 crore rupees and domestic investors bought shares worth 2,814 crore rupees. Now you can ask that in this falling market, when FIIs are selling for the last 8 months, why are domestic mutual funds buying? It's because retail investors still believe that the market will revive and in the long run they will get a good return. However, in the current environment, new investors are hesitating from entering the market. The recent figures of Association of Mutual Funds of India AMFI shows the latest mood of retail investors. Figures suggest that in May, 12,286.42 crore rupees came in the market through SIP route. The number was 423.33 crore higher than in April. In April, 11,863.09 crore rupees were invested. This inflow is inducing the mutual funds to buy at every dip. The situation of debt mutual funds is completely the opposite. Unlike equity, money is not flowing in it. In fact, investors are withdrawing their investments. During May, there was a net investment of 18,529.43 crore in equity mutual funds. While in debt mutual funds, there was an outflow of 32,722 crore rupees. The reason for this outflow is the application of an interest rate hike due to higher inflation. This is the major factor why investors are withdrawing money from debt mutual funds. Now, let us dig deep into numbers and look at indication which is suggesting a big change. The number of new investors entering the market through SIP has declined. In May, a total of 19.7 lakh new accounts were opened. This is the lowest in the last 12 months. Hence, new investors are hesitating due to volatility in the market. Higher inflation, higher crude oil prices due to war, interest rate hike in US are some of the many factors which are infusing volatility in the Indian market. However, market experts believe that these are global issues and fundamentals of the Indian economy in the emerging economies are the best. So when the uncertainties will reduce in short to medium term, investors' confidence in the market will revive. However, figures of last 8 months indicate that to boost the market, FIIs inflow is needed and not just domestic ones. Because domestic investors can reduce the sharpness in the fall, but for the boom, foreign investment is required.